Assalamualaikum. Today, I and my team will present about legal advisor service presented by us, SYAZWIE, Muhammad Afiq Aiman, Ahmad Yasir, Muhammad Haris Ishad, and Muhammad Sazwi. Introduction. Companies in Malaysia are those entities incorporated under the Companies Act 2016 or under the previous Companies Act 1965. Including any entity formed or incorporated or existing in Malaysia or outside Malaysia, foreign company, limited liability Malaysian or foreign partnership. Not include any public authority and not incorporate for commercial purpose, sole proprietorship, cooperative societies and trade union. An entity can be incorporated as a company when one or more persons register the company for any lawful purpose.
Classification of companies based on Companies Act 2016. Companies can generally be classified as limited and unlimited liability companies and public and private companies. Section 10, subsection 1, Companies Act 2016 states that a company may be incorporated as a company limited by shares, a company limited by guarantee, or an unlimited company. Where the company is a company limited by shares, the member's liability is limited to the amount unpaid on their shares. And where the company is a company limited by guarantee, a member's liability is limited to the amount they agreed to contribute in the event the company is one of.
Alright, Assalamualaikum warahmatullahi wabarakatuh. I will share for you 5 types of companies in Malaysia. Number 1 is just private limited company. Usually, private limited company, the name of the company must be N with serial number hard for Malaysia. So, maximum numbers of the members is 50 and transfer of shares is restricted. So, number 2 is public limited company. Usually, name of the company will end with Berhad, BHD, and they have no limit for members and transfer of share is through the share market. So, number 3, government linked companies. Defined as companies that have a primary commercial objective and in which the Malaysian government has a direct controlling stake. So, Petronas Berhad, as an example, Petronas Berhad, Tenaga Nasional Berhad, which is TNB, and Syabas Berhad. So, they have a direct link between government and the company. So, number 4 is foreign company. Foreign company defined under the Companies Act 2016 as a company, corporation, society, association, or other body incorporated outside Malaysia. So, number 5 is investment company. Is a corporation or trust engaged in the business of investing the pool capital of investors in the financial security. So, what registration requirement for of CCM, which is Companies Commission of Malaysia. So, number 1 is citizen and permanent resident of Malaysia, which 18 and above. And then number 2, register the business within 30 days from the date of commencement. Number 3, the nature of the business should not contravene any laws. Submit a copy of a permit, license, letter of approval or supporting letter when registering a business that requires special consent or approval. Number 5, submit application for registration personally to the nearest office of the Companies Commission or sent by post. Number 6, attach the following documents, which is photocopy of identity card, photocopy of partnership agreement, permit, license, letter approval or some supporting letter from another agency. So this is the requirement that must be that must be done by whoever want to register under CCM.
Financial reporting requirements based on Companies Act 2016. The Companies Act 2016 decoupled the submission of the financial statement from the annual return. Section 259 Companies Act 2016 requires a company to lodge its financial statement and reports, or called as the accounts, with the ROC. For a private company, it must be done within 30 days from the day the accounts are circulated to members. The accounts must be circulated to the members within 6 months from the end of its financial year. In the case of a public company, the accounts must be lodged with the ROC within 30 days from its annual general meeting. Financial reporting requirements based on Financial Reporting Act 2016. Financial statement must be prepared or filed with the Securities Commission. Securities Commission under the rule of any law administration, the central bank, or the registrar of companies. Such financial statements are considered not to have complied with the regulations of the law, except they have been prepared and kept in agreement with the approved accounting standard subject to any specification, guidelines, and regulations pursuant to any laws enforced by the Securities Commission or the central bank. This may be provided in terms of these financial statements.
Hi, my name is Muhammad Afi Aiman and I will present about element of annual report. It has 5 elements of annual report, which are chairman statement, financial statement, statement of internal control, social responsibility statement, and business profile. Firstly is chairman statement. Chairman statement is a report from the chairman about progress during the preceding year and prospects for the future. The chairman letter will set the tone, establish a theme, and most importantly, summarize the report for the reader. Second is financial statement. It includes the balance sheet, income statement, and the statement of cash flows and shareholder. Example, companies such as Nestle, Samsung, and Apple, it depends on the companies. Some companies will include more financial information depending on their industry and size of the company. Third is statement of internal control, a public accountability document that describes the effectiveness of internal controls in an organization and is personally signed by the accounting officer. The second last, social responsibility statement. It can help management articulate and reiterate the value of the company. So it can help the value of the company to make the company become better. The last is business profile. It's a basic element for annual reports. Next is legal requirement in Bursa Malaysia Securities Berhad. Listed companies have to make additional disclosure regarding the performance of the company. It requires to make a preliminary statement of result within 6 months following the end of the financial year. Lastly, the listed companies are to issue half-yearly reports regarding their performance within 3 months following the end of the year.
Hello, I'm SYAZWIE, and I would like to present advantages and disadvantages change from partnership to company form business. So the first advantages is the liability of shareholder is limited to the face value of shares held by them. Secondly, large membership, the business risk is divided among the members of the company. So if the company have losses, the losses will divide equally among the members. The third expansion of business is easy by issuing new share, as there is no limit to the maximum number of shareholder in a public limited company. So the more the shareholder is, the more capital the company have, and the company will easily to expand their company with the capital of the shareholder. Fourth, the share of public company are freely transferable. A shareholder can dispose of his share at any time, which means if the shareholder needs money, they can withdraw their share anytime. Fifth, the shareholder usually will select the well-experienced director to handle the business management, which means uh, usually the director elected by the shareholder is well experienced to manage the business. So the first disadvantages is if directors fail to meet their legal obligation, the shareholder may be held the company debts. Secondly, delay in decision making. All important decisions are taken by the board of directors, which means they will hold a meeting among the board of directors to make a decision. So this will make delay time. Third, a company has to comply with more legal requirements which consume considerable time and effort. Fourth, the company can be expensive to establish, maintain, and wind up. The fifth, the fifth is the financial affairs are public. So if the company performance are going down, so the public will know it, and uh, they will not buying their shares.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Haris Ishaq bin Zorazif from the IA4C. Today, I will tell you about differentiate the element disclosure in financial statement between company business and sole traders. So let's go. The difference are, for a company business, a company is fully liable for its own debts. When it goes into liquidation, the shareholders of company are liable only for amount that they had not paid for their shares, which is limited liability. For sole traders, a sole trader goes into liquidation, then he personally liable for any outstanding debts of his business. Second is, a company must follow the proper accounting concept, principles, and rules. For sole traders, the owner have the option to follow the proper accounting concept, principles, and rules. Third is, companies can freely transfer to strangers. For sole traders, partners cannot transfer the profit or substitute themselves without others' permissions. Fourth, shareholders' fund equal to the sum of share capital, retained earnings, other revenue, and capital resources. For sole traders, only one equity, which is the owner's equities account. The last one is the full company. The last one for company business is the full company tax rate is 30%. Different company tax rates apply to a companies that are base rate entities. So the sole traders pay tax at the individual income rate. So that's it. Thank you.
As a conclusion, our partnership enterprise should be confident in BADEO by changing their form of business from partnership to company form of business. This change will give a big impact on their business in terms of control, obligation of liability, investment opportunity, and expand in business code.